Welcome all of you. Today we are going to discuss an introduction about accounting. Through this session, you can get a basic idea about the definition of accounting. So let's discuss what is the definition of accounting. So this is really easy to understand. Let me explain you one by one. What do you mean by accounting? Accounting is a process of providing information to stakeholders to make their decisions. Accounting is a type of process. Through this process, stakeholders can get information to take their decisions. So let's discuss who are stakeholders first, unless some of the students don't understand who are stakeholders. So stakeholders can identify in another name called interested parties as well. So these stakeholders or interested parties are the parties who involved in a business. The parties who involved in a business are considered as stakeholders. So stakeholders or interested parties can mainly divided into two groups. First one is internal parties. Second one is external parties. Let me explain you who are internal parties. Internal parties are the parties such as owners, managers, and employees who involved in the business insidely. External parties such as customers, creditors, government, the parties who involved in the business outsidely. Then stakeholders can divide into two groups, internal parties and external parties. Internal parties are the parties who involve in the business insidely, and the meaning of external parties is the opposite of the internal parties. That means the parties who involve in the business outsidely. So this is the introduction about stakeholders. Then after that, let's see for what these stakeholders need financial information. Stakeholders required types of information called financial informations. So these financial informations are the informations that are very important or essential for the stakeholders to take their financial decision. To take their decisions, they need type of information called financial information. Unless they have to take a decision without using financial information. So thereby, stakeholders require financial information to take their financial decision. So in accounting, stakeholders have the ability to get their relevant information to make their decisions. So this is the process of accounting. This is an example for the process, and in this session we are not going to discuss further about the process, but we need to get an idea, simple idea about the process as well. First of all, we have to recognize the transactions that occur in a business. Then after that, we have to record into relevant source documents, private books, etc. Then after that, we have to classify into 5 groups: assets, equity, liability, income, expense. Then after that, we have to summarize all the things, and after that, we have to interpret and communicate with each interested parties. Then that is an example for the process of accounting. In this session, we are not going to discuss the process of accounting, but this one it is very important for you to get a simple idea about the process of accounting as well. So by this process, stakeholders have the ability to get the financial informations to take their decision. Then the main objective of accounting is what? To providing information to stakeholders to make their decision. So this is what called accounting. The definition of accounting is really easy to understand as well. In next session, let's discuss very important points which related to introduction of accounting. So for today, it's enough. So hope you got really good idea about accounting, definition of accounting through this video. So thank you for watching this video.